Good morning, everyone. Today I'm joined by Matt Walrath from Crypto Tax Made Easy. They're the tax accountants that I use for all my crypto stuff, so full shill. Go check them out. Mate, awesome to have you on the show.
Great to be here. Yeah, dude. Usually
Dude,
I used to be your source for Cointelegraph, and now here we are, filming a pod.
Exactly. Running it back, dude. Mate, we've just had end of financial year happen, 3 days ago? So now's the time where everyone's kind of filling out their little tax forms, probably hunting down accountants, looking at what to do. It's a pretty fucking scary time. I think for a lot of degens in particular, of like trying to figure out all your inputs and on your tax calculator software, what good things you've done, what bad things you've done, how not to get audited. What's the one thing from your side that you wish more people knew around tax time?
One's hard. I would start with, yeah, it takes a while. It takes a while to get all this done, so don't wait till the last minute. I think a lot of people are used to, you just get your wage and you know how much you earned. You just maybe put it on MyGov on the ATO website, and it's pretty much simple as that. Like, tax seems like a relatively easy thing for most people. Whereas when it comes to crypto, most people are full degens, at least the ones that we work with. Once you start racking up thousands to tens of thousands of transactions per year, now all of a sudden your tax situation looks a little bit more like maybe a high frequency hedge fund. And they've got lots and lots of accounting firepower to make sure that they're compliant and not overpaying on their own tax. So you kind of want to think about yourself as like a mini degen hedge fund. And you're no longer going to be able to just last minute hit up an accountant. I mean, I get people literally like the day before a deadline, hey, can you help? In this industry, it doesn't really work this way. So give yourself plenty of time. Financial year just ended. This is the best time to actually contract an accountant to help you out, especially on the crypto side. Because, yeah, when it comes to last minute, whether it's the tax agent that might file for you, or, crypto accountants like us, we're usually pretty booked up last minute. So I'd say that's the one thing. Just, it takes a while to get the work done, so plan ahead.
Okay. And so for people like looking at like end of financial year, how long of a time do you think, like what's the window of like in terms of weeks, months for finding an accountant post like end of financial year 24 to 25? How long do people have before they should start being like, oh fuck, like I really need to start looking now? Like I've now, I've onboarded with you guys, and so I just feel pretty like safe, like just having that rolling kind of thing. But if they're in the market for a new accountant, how long should they be, divvying up their kind of options and figuring this shit out?
Yeah, of course, earlier is better. Here in Australia, if you have a tax agent in your corner before the individual deadline in October, then you get an extension until May of next year. So you definitely, like the last minute is getting a tax agent in your corner before the October deadline, because then you get all that extra time to get it done. So, that's the main thing. Like if you're going to wait until last minute, you got to get it done before the individual deadline in October.
Okay.
But of course, earlier better.
Yeah. Okay. Yeah. I remember that. That was something I think last year was the first year that I actually started like trading properly. Before that, I was just kind of like buy the occasional NFT, lose money on it, and then just kind of like DCA, like Bitcoin, ETH. So it wasn't until 23, 24 financial years that I started actually degenning on like Solana. And I think I submitted like 20 wallets to you guys with like a few thousand transactions. And I was just like, fuck, I'm so sorry. Someone please someone please fix this. But yeah, man, what are the other things that you think people should be looking out for around this time?
Yeah, I'd say for one, pulling your central exchange data as a CSV file regularly is really important. We've seen lots of exchanges go bankrupt or like stop supporting users in certain countries. I've seen, like MEXC, for example, the Vietnamese exchange, they only allow you to access like 18 months trailing of records. So it actually and then if you have those holes in your history, if you do end up getting audited, it becomes really difficult for you to substantiate the source of some of your funds, and that can cause some major issues and overpayment on your tax. So yeah, making sure that you regularly pull that CSV data from the centralized exchanges for all of your transaction history will likely save you should any of those exchanges lose your data, cut you off from your data, or just kind of go the way of like FTX. So that's something that I tend to recommend to all of our clients. And we usually send some reminders about that. The other thing is, like, a lot of people think crypto's anonymous and, you know, the ATO is incompetent and there's no way that they're going to be able to see this. But the ATO does have access to your data through any like brokers or centralized exchanges where you've KYC'd. They can get data about, let's say, the on-chain wallets that you send funds to or have sent funds to the centralized exchange from. So whatever you use as your onboard or offboard from AUD, that's like an entry data point, and now the ATO can kind of see anything that's touched those wallets or exchanges. So, you know, we do see some like notices go out from the ATO to people. A lot of our Australian clients actually, they come to us after they've received a letter from the ATO and they're scared and they want to make sure that they have their own side of the story documented. So it's good to like make sure that you have your own side of the story documented, even if you're trying to pull a dodgy and you know you don't want to report until years and years down the line. At least getting crypto tax software set up, pulling that exchange data, kind of, you know, staying on top of things can be really helpful in case the ATO ever does come knocking. It's a lot worse if you know, they come knocking and you're not quite prepared for it. And along with that, I'd say like every wallet counts. We'll have some clients who come to us and you know, initially they only give us like their CoinSpot account, and you know, we're like, oh, you only use the centralized exchange? Yeah, we only use that. But then it turns out that like that's how they brought AUD into crypto and took AUD out of crypto. They think that's all they have to report. But the issue with that is that now we don't have a cost basis for a lot of the tokens that are getting sent to CoinSpot. We don't have, you know, we can't substantiate it. So the ATO might think, well, you know, you received this. Why did you receive it? Well, if you can't tell us legitimately, it's probably income if they ever do come knocking. So it's just better to make sure that every wallet and exchange you've ever used, if you are going to enlist the help of a crypto accountant, just giving that to us up front is really helpful. Oftentimes it actually reduces the amount of tax that you'd end up having to pay just based off the way that the tax softwares calculate your tax. So yeah, kind of try to do a dodgy or hiding wallets, especially if they're ones that have touched centralized exchanges, not a good idea. You know, the preference is just get all the data to us. That way we can figure out what's the realistic picture of things, and then you can maneuver from there.
Yeah, okay.
Yeah.
Well, I see this, like, this is very, very common, particularly among, like, I feel like people that do a lot of degenning, especially when they have, like, a long chain of wallets, like they've set up a fuckload of EVM wallets or like Solana wallets, and they've got, like, lots of transactions, and they've sent money initially from a CoinSpot or a SwiftX into a Sol wallet, but then that's gone to a bunch of different accounts, and that's moved around. They almost feel like, it's too complicated for the ATO to track, so I can, you know, I'm gonna fudge some numbers here or there and just say like, well, I brought this much back onto CoinSpot or SwiftX, and that's like the taxable amount. I know before you're saying like the ATO is watching, but yeah, like I'm not necessarily trying to say like how competent is the ATO, but I don't know. Like, I feel like there's a very, very kind of like overinflated opinion of security of like, well, I have a really complicated transaction history, therefore, you know, I'm just doing the best that I can. But do you think that that's like misguided, or do you think that like the ATO has the capability to like really go through this and like with a fine tooth comb and be like, no, buddy, these are we can actually see all of the wallets that you've sent. Like, have they done that kind of thing before? Like, should degens doing this like have a bit more of like a fire under their butt for this kind of thing?
Yeah, I think it just depends on your own personal preferences, whether or not you want to be looking over your shoulder. I'm sure if you do the best you possibly can, you're not going to jail. Let's put it that way.
Okay.
You might owe some penalties, some interest if you've calculated things wrong. Obviously, it would help to know what your realistic tax liability is, so you can have money set aside, so that if you do have like an unpaid tax liability that the ATO uncovers, that it's not putting you out of house and home because you didn't set the money aside and you put it back into the D-Gen casino and lost it all. But
I can personally attest to that. Yeah.
Yeah. Yeah, exactly. But yeah, I don't know anybody at the ATO who's investigating crypto degen, so I can't speak specifically to what their skill levels are. I'm sure Harry Dell probably knows some people there that are in those kind of departments and could probably speak better to it from experience. But at this point, my only interaction's been I see that they send out some enforcement letters. So obviously they have enough capability to see what some people are up to and whether or not they're underreporting or just not reporting whatsoever. And it's usually people who don't report whatsoever that I've seen get these letters, and then all of a sudden they're needing to completely construct their transaction history in like a Coinly or crypto tax calculator, give their side of the story, so that they don't just default to whatever the ATO decides they owe.
This is one of those areas where I think that like the tax man always gets their pound of flesh. With AI in particular, I feel like it'd just be one of those things that in like the next couple of years, it would not surprise me if there was like some very advanced on-chain tracking software that then to like IRSs and ATOs use to be like, okay, cool, we can run this through some kind of script and figure out exactly what's going on. But yeah, tax can be, I feel like, a nightmare scenario for some people, particularly in crypto, where you can really run up a lot of money very, very quickly and then also lose it, if not more quickly. So I don't know. I'm really keen to hear what some of like the worst case scenarios are. Like what's the most like ridiculous like tax bill / blunder that either you've seen professionally from your side? Obviously, not naming names, but yeah, what are the things that you've seen or heard of in the industry that you've just gone like, holy shit, like this is probably one of the worst things that can happen? Because, we know that the regulations around crypto aren't perfect. And so like the NFTs disposing of assets at certain times can incur massive taxable events, and then people don't actually have the money for it.
Yeah, I'd say that the biggest one that I've seen most frequently just happens to be financial year ends on a specific day. In pretty much every country except for Canada, you can't push losses backwards. You can only carry them forwards. So I will see people who make a huge gain in, let's say, the FY24, and they do that before 30th of June. And then in July, August, whatever, in FY25, they just lose it all. And they haven't set aside money for tax. And so they have this huge tax bill on that giant gain in FY24. They put everything back in the casino, completely lost it. And now they have nothing to be able to cover that tax bill. So they end up having to go on installment plans with the ATO, and not really a fun situation to be in, where like every dollar you earn at that point, well, not every dollar, but most of the dollars you earn at that point go to servicing an ATO debt. I actually saw one kid had come to me. He actually just disappeared, like after he realized how screwed he was. But he came to me and he had a 7-figure win, just like in the pump fund trenches in FY23, and then he came to me in FY24 and was like, dude, I lost everything that I made last year. I ran it up 7 figures. I'm down to like 5 figures. He's like, can we push losses backwards? What can we do about this? Blah, blah, blah. I was just like, dude, that's not a good situation to be in. I can connect you with some accountants, but yeah, being an anon, I think he was just like, I'd rather sweep this under the rug and hope the ATO never catches on. But I've seen a lot of those cases. Like, it was really bad, especially in the US, because their tax year is the calendar year. So like 23, a ton of people like hit it pretty big on whiff. And, a lot of tokens just pumped through the end of 23. They got like the Jito airdrop, the Pyth airdrop. They got a lot of the big airdrops at the end of 23 that kind of kicked off this kind of bull that we're currently in. So they had this huge tax liability, but again, they put it all back into the casino in early 24. Might have lost it on some meme coins, because obviously they're just full risk on. Didn't really think about their tax liability, didn't think about setting it aside, completely wrecked. Same thing happened 24. We had the Trump inauguration pump. We had the kind of like Trump pump into January, but then everybody just got absolutely wrecked from like Melania to present day. And so a lot of people have huge 2024 tax liabilities. And again, if they put all the chips back on the table and just got absolutely wrecked in early 25, it's such a horrible situation to see. And that's one of the reasons why it's so good to know regularly what's your tax liability looking like, so you can put those funds aside, outside of the crypto casino, and make sure that no matter what happens with your P&L on chain, that at least you can cover your tax bill. And if you get completely wrecked, at least you don't have this like taxman debt that you owe, and you're kind of servicing with all the gains and income you have for the next couple of years.
Let's actually, that's a good point with the airdrop stuff that you've mentioned just now. What are the key things that people should know about airdrops? Because I know that there's some differences between like Australia and the US, with like what makes it a taxable event and what you kind of have to pay when those airdrops hit your account. I've actually had a couple of airdrops in like the last few months. Haven't had any in like the last 2 months, but at the beginning of the year there were a few that I was like, okay, that's decent. And I've clipped some of those out for gains, and I've clipped some of those out for tax. But what are the main things that you think that people need to be aware of when they get an airdrop, and what they need to do, depending on whether they're Aussie or US or whichever jurisdiction?
Yeah, so there's really two ways that airdrops are taxed worldwide. One is that it might be considered as income. So when you receive it, whatever the fair market value is, that is assessed as income, and you pay income tax on it. So for example, if you receive tokens, they're valued at $1,000 when you receive them. Now you have $1,000 income tax liability. If, one of the things that sucks about airdrop taxes in that regard is that if the token decreases in value, let's say it's worth $500, you might think, okay, I sell it for a $500 loss. That $500 loss reduces the income, right? And in most countries, no, wrong. The income and capital gains and capital losses are separate categories, and they don't always offset each other. So a capital loss may not reduce your ordinary income tax liability. So that's one way that it can be taxed, which tends to screw a lot of people over because, as we know, like when you claim or receive an airdrop, it's kind of a race to see who can dump it, because most charts just look like and then they bottom out at like 80 to 90%, and maybe they have a little relief pump up another 50%, but they're still down 80%. So yeah, it's that's one of the ways that it gets taxed. It's really unfair in my opinion. And then the other way that it gets taxed is that when you receive it, you just receive it at a $0 cost basis. And then if and when you sell it, you essentially get taxed on the full sale amount. So let's say, again, you receive coins. They're valued at $1,000 when you receive them. But because you just got them as an airdrop, $0 cost basis. Let's say token dumps, again, similar. Let's say it dumps 80% to $200 and you sell it for $200. Well, now you just have a capital gain tax on that $200. So it's not that bad because you don't have this $1,000 income tax liability and this gain or loss. So that's the more fair way, I believe, to treat airdrops, staking rewards, things like this. Whenever you receive a token that's highly volatile, I think that's a more fair way to treat it. Now, in Australia, initial allocation airdrop, so if the token wasn't traded before the airdrop occurs, then those are non-taxed. Those are essentially $0 cost acquisition. and then you get taxed on the full value at the time of sale. If it is a subsequent airdrop, then it is taxed as income. So you might think about airdrops that had different seasons. Like let's say InfoFi had, multiple seasons. They had their initial allocation where it was the first time that they dropped their InfoFi token. If you received that airdrop, then it would be a $0 cost acquisition. So you don't pay any tax when you receive it, only when you sell it. Now, let's say that you continue to hold like the InfoFi ETH, like the ETH or whatever they called it.
Yeah.
And, season 2, season 3, you're continuing to get InfoFi airdrops. Now, those ones would be taxed at the fair market value when you receive it. So, yeah. So then the best practice usually for those subsequent airdrops when it is taxed as income is, especially if it's a claim, just think about what's your highest marginal tax rate and then just sell that much, set it aside. Especially if it's a substantial airdrop. That way no matter what, if you're going to hold it, no matter what the price action is, you've got those funds set aside. If you end up claiming it and just selling everything, again, set aside the tax amount somewhere that you're not going to be ready to go full risk on and throw it back into the degen casino. And then that over time you've kind of set aside enough money to pay your tax liability from those airdrops. So that's kind of like the primer on how things work. You did mention US. US is income. Always. We were kind of hoping that the big beautiful bill, as Trump called it, was going to have some inclusions on fairer rules for crypto tax, but unfortunately it sounds like those have been excluded from the bill. So it sounds like we're still either relying on tax lawyers to defend the fair position, which can cost a lot of money, or you might just have to accept the IRS guidance that airdrops are taxed as income.
I could be getting it wrong, but didn't Hyperliquid do something where they released their airdrop before adding the full liquidity to the token? So when they airdropped the token to people, because those airdrops were massive for some of the bigger guys on chain, there were people that were getting initially, even when Hype was $3, mid to high 7-figure airdrops. So you can imagine what that would be today. Why don't more protocols do something like a Hyperliquid where they understand the rules and they go, okay, we'll give you this token at a couple of dollars basically, and then just pump the price afterwards, so that your actual taxable event is you can do with it what you will.
Yeah, I can't speak to why the protocols don't help.
Come on, Matt. Why don't you run?
But yeah, with Hyperliquid, essentially they airdropped the token before it was transferable or before there was any liquidity. So a lot of times, the kind of litmus test for whether or not something is, let's say, taxable is whether or not it's transferable, whether or not you can sell it or otherwise dispose of it. That's kind of when you take domain and control over it, and when you can actually economically benefit from it. Can you transfer, sell, or otherwise dispose of the asset? So with Eigen, they also did it with Hyperliquid. They actually airdropped the tokens before it was tradable, so there was no liquidity, there was no markets for it. They made it non-transferable, so it went to your wallet, but you couldn't otherwise dispose of it. You couldn't transfer it. So from that perspective, it made it so that potentially you could argue that you received it. It was worth nothing when you received it, and so if it's worth nothing when you received it, zero cost basis. Once it's able to be transferred, sold, or otherwise disposed, and you do that, then maybe it's taxed at the full fair market value. So with the initial Hype airdrop, if you were in Australia, doesn't matter at all because it's a initial allocation airdrop. That's zero cost basis, tax at the full value at the time of sale. But yeah, in the US, I think they also launched at an initial trading price that was super low. So
Yeah.
so even if you considered it, what's the fair market value at the time that it started trading, it was like a ridiculously low starting price for trading, and then the price kind of pumped immediately afterwards, probably because they injected a ton of liquidity. So it does sound like the Hyperliquid team with the Hype airdrop actually considered the tax liability of their users, which honestly, dude, good on them. Like
Go,
that's
go
dope.
Jeff, man.
Yeah,
That's another reason to be bullish hype. Because I remember seeing that, being like, what the fuck is going on there? And then later, seeing a lot of threads of people being like, holy shit, they did this so that you could like essentially, not get absolutely murdered in the US on that airdrop allo initially.
And it makes sense for like price action as well, because if you think I need to immediately dump some or all of this in order to pay off my tax liability, you're going to have sell pressure the minute that you airdrop that. And it's just going to be sell pressure, sell pressure, sell pressure. Whereas if you do it in a tax advantage way and people don't have to sell for tax, and it's something where, you've created a token like Hype that has some tokenomics that are really good, and positive for price action, up only 10.
They are good. Yeah.
Yeah. Then, you pretty much set the stage for like some really solid price action out of the gate, which most airdrops don't experience.
Yeah, true. Because it's literally like you basically have to clip like, comfortably at least 30% to be like, okay, like I've got my tax liability sorted on that. So yeah, I hadn't actually thought of that as actually like positive price action as well. I thought it was just like a nice kind of benefit for users, but it is that, we're reducing the sell pressure because people are not going to be incentivized to go, fuck, I have to clip, a third of this immediately. Especially when you're giving people 7 figs, you don't want to have like a minimum 300-400K sell pressure from each individual user. So yeah, InfoFi has been gaining in popularity a lot. I saw a thread that you put out the other day on what the tax implications are, because now we've got this post to earn model showing up of, you can tweet about it. You can tweet about certain projects and gain exposure to them, and then also get paid for posting on the interwebs. What are some of the specifics around that could be of note? If you've gotten into InfoFi, what are the differences around that between that and just getting like a normal kind of like token allocation?
Yeah, the biggest difference is that there are some countries where the litmus test for whether or not an airdrop is considered income, or kind of that you got it for nothing, and the cost basis is 0 scenario, is did you have to provide a service or like even provide a product in order to get it? Because like you got to think about how income is defined broadly. It's like, did you sell a product? Did you provide a service? And did you get compensated for it? So when it comes to InfoFi, like if you are explicitly getting rewarded for doing marketing activities for the project, then it becomes really hard, whether you're in Australia and it's a TGE airdrop, like an initial allocation airdrop, or you're in another country, like let's say Canada, UK, Germany, where airdrop, might be taxed more towards the like 0 cost acquisition. Well, as soon as you're providing a service, it just kind of looks like income, whether it's called an airdrop or not. So, for all the yappers out there, even though most of these projects are giving you an initial allocation airdrop, it may be taxed as income because you had to provide marketing services in order to earn it. So you did something in order to get it. So, that's one of the things that I pointed out people might not be aware of. They might be thinking, I got an airdrop, so whatever the normal airdrop taxes in my jurisdiction are apply to this. And they might not be ready to realize that actually this could be considered income here. And I like actually how LOUDIO did it. Don't like the price action of their token. Definitely didn't like seeing it all over the timeline. But they essentially made it so that you could get in on their pre-sale at like a ridiculously low market cap. And pretty much everybody that got in on that pre-sale got like 100x. So I love the way that they did that, because in a lot of countries, again, airdrops, taxed as income. Most people are just going to insta dump it as soon as they get it because they need to cover that tax liability on the income. Whereas with LOUDIO, it was like, okay, let's give all these top yappers the ability to get in with like 0.2 SOL. So, give them like a $20, $30 allocation in the pre-sale. And by the time the thing launches, they're up 100x. That's worth like $3,000. And so instead of giving them a $3,000 airdrop that's income taxed, now it's no matter where you live, it's a capital gains event. So, you've got you put $30 in, it's worth $3,000 when you sell. You've got a $2,970 capital gain. The benefit of it being done that way is that if you have a bunch of losses from the casino, maybe not the casino, but from, pump fund trading,
the markets,
the markets. Yep. If you have losses from that, now that can offset the gains that you got from that pre-sale allocation. Whereas if you are taxed on the airdrop as income, all of those losses that you have from the degen casino, they do not necessarily reduce the amount of income tax that you owe because they're different categories and they don't necessarily offset each other. So that was actually, I think, a great way if projects like launching on Cato or any of these other InfoFi want to structure it, is to do it as a presale. It's just much better from a tax perspective. Of course, LOUDIO was a bit of a failed token launch if we look at the price action. But I think from a mechanics and tax consideration perspective, spot on.
Another tweet that I saw from you the other day that raised my eyebrows was the level to which the automated tax software can be off. Like, I know a lot of people that, aren't doing a shitload of transactions, but are doing a little bit on chain. They're moving stuff around. They're wrapping and unwrapping tokens. And in your tweet, you're talking about how, a lot of the automated tax software can be off by, a margin of like a few $1,000s up to, 5 figures, which is a non-insignificant kind of margin of error if you're going to be putting tax through. Why is it that tax software can get it so wrong?
Yeah, there's a lot of factors that come into it. So that was based off of just a study we did where we benchmark. So anybody coming to us, we benchmark what does the crypto tax software say that their gains and income is. And then once we do our work, we take a look again and we see what is the actual gains, losses, and income. And so we actually study, all right, for each tax software, for the benchmark, like the out of the box, this is what it says they owe, to the transaction data has been categorized and reconciled, this is what it says they owe. It's usually off by 4 to 5 figures on average. So that can be pretty substantial. For whales, it's bigger. The bigger your account is, the more volume that you trade tends to be like a larger magnitude of error. So the big reasons that tends to happen is there are automations built into each crypto tax software. They're not great. Some of them are, like recognizing you did a trade from AUD to, BTC on CoinSpot. It's going to get that right 100 times out of 100. But as soon as you start doing things like providing concentrated liquidity, doing some really advanced DeFi stuff, you start moving out, towards some of the newer protocols that their developers haven't been able to create automations for. Depending on how their tax engine treats those uncategorized transactions, can make a huge difference in the final tax outcome once things are calculated. The other thing is a lot of times data is missing or data is incorrect. So missing tends to be from exchanges. Some people will set up like a tax API from their exchange to the crypto tax software. The tax APIs don't always pick up every transaction and every product on the exchange. Usually the CSV data is a little bit more complete. Some people, again, omit burner wallets and stuff like that. And so there's holes in their transacting history. So that's the kind of missing data that we tend to help people clean up. And then there's the incorrect data. So sometimes, you know, like one thing that I'll see is there was a meta for a while where that was based off like ticker Bitcoin, the Harry Potter Nick Obama 69, you know? And it was ticker Bitcoin. And then there was all of these other derivatives or betas off that would have tickers that were exactly the same as top 10 market cap tokens, but they were these meme coins with like 1 billion supply. So, you know, the crypto tax software might pick up, you know, like ETH, but really it was like, you
Some
know,
shit
whatever,
coin,
yeah, Obama, Lockheed Martin, you know, 420, whatever.
Inu, come rocket, 69.
Yeah, exactly.
Yeah.
So then, you know, that they might have like 1 million of those that they bought for $100, but, you know, and it's ticker ETH. And now the tax software is like, you have 1 million ticker ETH, you know, at $100 cost basis. So then the cost basis of ETH drops towards $100. It's weighted towards $100. And next time you sell real ETH that you might have bought for $3,000, it's like you sold it for, you know, $3,500, and we see that you bought it for $100. So then you got like a $3,400 gain that isn't real. So that's a big one. Or just like price feeds not existing, or again, like incorrectly pulling from the wrong ticker if there's like overlap between tickers. Like I've seen spam tokens that have the same ticker as legit tokens. Because of that, the spam filters don't filter them out. And then they also pull the price feeds from the real token, and that tends to inflate things. So those are some of the reasons that it's like very wrong out of the box. And then, you know, through our processing, we bring it back to reality.
I'm not sure if this is going to tread on any toes, but like, do you have like crypto tax software that you tend to find to be more reliable? Like, are there any platforms that you get through and think like, oh yeah, this is great, and then like relative to other ones, or is that something that you're not going to want to be like, oh yeah, these guys are great, these guys suck?
Yeah, I don't want to burn any bridges, but I'd say like none of them are accurate out of the box. And I don't think that picking the one that's the most accurate out of the box is the right way to go either. Like I see that a lot of people will try like 5-6 different softwares, and then they're just like, that one seems like it gives me a good final number. I'm going to go with that. I'm not going to do any work. I'm just going to print out forms, give them to my account. The problem there is that usually down the line, the errors start to appear. And, you know, the magnitude of the errors start to become apparent in future years. And then you've got to kind of go back and clean things up. So for me, I would recommend that people use the tax software that supports the blockchains they use natively, first and foremost. Like if you're a heavy Hyper EVM user, if there's a tax software that doesn't have any Hyper EVM integrations, don't use it. It's going to be really hard to pull that data using a CSV, and then, you know, it's a lot harder to investigate and categorize those transactions. So like if you're really, like for a while, heavy Solana users, most crypto tax software was dog shit for Solana. So we would just, you know, put people on the ones that natively supported Solana really well. So I'd say like blockchain integrations is a big one. Exchange integrations, not as big, because in general, using CSV imports for exchange data is the preferred way to do it. Pretty much every tax software allows for CSV imports. So that's not as big a one. But then, yeah, country support's huge. Like some tax softwares don't have good like coverage of all the different cost basis methods that might apply to a country. You know, for example, in Australia, we have a lot of leeway in terms of the tax lots that we're allowed to dispose of. So you can actually come up with, and like Crypto Tax Calculator and Sila and a few others that are very Australia focused have come up with good algorithms for how to give you the most tax optimized cost method, whereas others might just generally give you the basics. First in, first out, last in, first out, highest in, first out. Canada has a very complex cost basis calculation method, so some don't support Canada for that reason. So that's a huge one. Is country support there for the country or countries you need to report to? And then from there, I think it's just like, do you like the UI? Is it confusing to you, or does it give you the data that you need? Because if you're doing it yourself, you're going to spend a lot of time in there. Like, we spend dozens and dozens of hours in client accounts. And so if you're going to be essentially taking on a new part-time job of doing your own crypto tax, you better like the user interface. Otherwise, you're just going to be miserable day in and day out. So I'd say that those are more important factors than I put it in and the first number I see is kind of close to what I expected.
No, that is a good point of like, you can't just choose the software that gives you the lowest number, because you're like, oh, well, it could be wrong, but hey, at least it's a low number. So I prefer that. I do remember the input thing being massive, like particularly on like Solana. I remember having a bunch of different transactions that for like the bigger ones that I went and looked through before I sent it over to you guys, was like, there's just like a couple of memes there that the inputs were just completely wrong on. And I just remember thinking like, fuck, I have no idea how to like actually fix this or find this data. So yeah, that can be confusing as shit. You've been doing like very well with the crypto tax made easy side of things. I know that you've had a pretty good degree of success. You've been kind of like capping the number of clients you've taken in, which is always nice, of like, we're at capacity. What's it been like growing a tax business, and how'd you get into this in the first place? It's an interesting arc.
It is a bit of an interesting arc. I got into it in the first place because it was just scratching my own itch. Back in, kind of let's call it the COVID bull market. I got really back into crypto. Like, I've been in crypto since like early. And I was definitely like a round tripper, and I was retail, I was exit liquidity. I bought a lot of ICO scams. I should be a lot richer than I am. Let's put it that way. And yeah, in the early days, because I was that like retail exit liquidity, like got burned a lot, I was kind of like, screw crypto. Like, it's just a bunch of scammers. And
which should be fair to think in the ICO era, like that was just unadulterated scams at the end of that for just
it was pretty full on.
Yeah.
And so I really stepped away from it for a while, and then just discovered DeFi and was like, wow, okay, like this is legit. Like, this is a killer app. This is the type of thing that I think like crypto was built for. And so I got really deep into DeFi, and then I started getting very degen with DeFi and started, getting onto Binance Smart Chain, all of these like decentralized exchange fork Ponzi's, and just trying to get my hand off the stove before I got burned. Next thing I know, I just racked up thousands and thousands of transactions. Whereas before it was like, you might buy a little bit of Bitcoin or ETH on an exchange. Maybe you send some ETH to some ICO wallet and hope that you get tokens in exchange for that. But very, very few overall transactions, like easy enough to keep track of in a spreadsheet. And then once the like exotic chains like Binance Smart Chain and Phantom and thousands of transactions of complex DeFi were showing up, it was no longer feasible to use the spreadsheet method of tracking anymore. So I was like, I often was hearing about TaxBit was kind of like they were putting a lot of money into sponsoring like crypto YouTubers and podcasts and all that. So I was like, they make it sound like you just put in your wallets and they calculate everything for you. Like, no worries. And I remember waiting till kind of last minute and putting everything into TaxBit and realized, they don't even support Binance Smart Chain. They don't support Phantom. They don't support, they don't actually, like, even the DeFi on ETH mainnet that I was doing, I was like, they don't support that. So then all of a sudden I was in this position where I was like, oh crap, I need to get an extension on my taxes, and I need to figure out how to do this, because there weren't a lot of like really expert crypto accountants at that time. There was a lot of people who, like, I don't know, knew how to track Bitcoin in a spreadsheet, but everyone was kind of figuring things out as we went back then. So I started testing a bunch of the tax softwares that were available. And I just found that Coinly was probably the most usable. And they also had like really good blockchain support. They were like one of the only ones that natively supported Binance Smart Chain and some of the more exotic EVM chains that I was kind of branching out to at that point in time. And I just really became an expert in how to use it. Like, shout out to, I think, Carl at Coinly. He's still on their support team. I think he's their head of support. He really helped me navigate the platform. And yeah, I just figured out how to do my own crypto tax. I had to do it twice a year because I'm American. America gives you the great pleasure of filing your tax no matter where you live in the world. Live in Australia, also have to pay my tax here. So I have to file twice a year. And I just created this like cheat sheet for myself with like over the shoulder screen recordings of like, hey, Maddie, here's how you do this if you encounter liquidity. Here's how you do this if you encounter like staking, whatever. And I actually shared that with a few buddies that I was in group chats with. And they were like, oh, dude, this is super helpful. Thank you so much. But like, I can't be fucked to do this myself. So can I just pay you to do it? And at the time I was a bit hesitant, but you know, for one of my friends, he was having a lot of anxiety about it. And I was like, okay, like I'll help you out. Like he was really struggling like emotionally with it. So I was kind of just doing it to help out a mate. And yeah, he unfortunately told people that it was a really good experience. And all of a sudden I had people just knocking down my door asking for help. And I thought, okay, I'll just take on a few of you guys. And it just kind of snowballed from there. I think it's one of those things where I was right place, right time with the right skill set, the right network. And I think that's how things initially kicked off. But yeah, that was for like the 2020, for us in Australia, 2021 tax year. And then things just kind of grew steadily after that. But in the last year, things just went absolutely bonkers. So yeah, I don't know if you have any questions you want to ask about that growth arc, but I figure I've been talking a while now.
No, that's good. Like, what's the size of the team now?
Yeah, so the current size of the team, I actually pruned it down a bit. Got rid of some of the people who just didn't show me that they couldn't perform under pressure in tax season, or just didn't have the culture fit for the team. Now is like the slow season, so pruned it down to a team size of about 11 right now. Actually 12 as of recently. And my goal is to get another 6 accountants on board for the upcoming tax season. I think that'll allow us, if we look at the like past growth, if we cap it where we want to cap it, that kind of gives us the capacity that we need to be able to serve all of our clients. No worries.
What are the main learnings that you've taken away from scaling that from just you to having a big team? What are the key things that you've taken away from being like, oh, this really worked? Like this was something that really helped me go from one person to, I have a lot of people and this is a legitimate business.
Yeah, I think the good thing is that I was able to grow in steps. So after that first year, I was just kind of helping out buddies, you know, maybe spending 20 hours a week on it, had some other irons in the fire. And then it just hit the point where there was so much demand pulling that I was like, well, back then I was at capacity. I was like, I'm literally only going to give 10 to 20 hours a week. And I just had a huge waiting list. And I thought, like, I've already taught people how to do this for themselves. I could probably teach an accountant how to do this for me and, you know, for my clients. And instead of having this huge waiting list, I can probably service the demand. So I was able to hire my first junior accountant to really help out with the process kind of after that first tax season. And that gave me a lot of insight into how do you actually train people to do this? Like, what are the skill sets that are required for somebody to be good at this? Like, it allowed me to kind of put the scaffolding in of our like accountant development program that now is scaling up. So it was, but the problem is I was only training one person. I could give them a ton of effort and energy. You know, compare that in year 2 to like year 4 or 5, which we just went through, where I was onboarding like 8 new accountants at one time. And I could no longer give each one really individualized attention like I could in year 1. So it's like, as I've continued to scale up, I've had to figure out, how does the training scale up? How does the quality control on the work scale up? Like, how do we make sure that we continue to deliver a very personalized client experience when we've gone from 60 clients in a tax season in kind of year 2 to like 600 in year 4? So, you know, it's like, it's one of those things where I've been lucky that each tax season, there's kind of an end to it. I tend to be able to be like, okay, this is what I think we're going to need to do to service the growth and demand. I'm able to implement that. I'm able to kind of, you know, test the hypothesis, see whether or not it worked. And then we have this slow period after the like heavy period that has been a great opportunity for me to be able to reflect, to actually see like, okay, how did my hypothesis play out in real life? Did it actually, you know, did the training program scale? Was the quality control that we had in place, adequate for the new like work throughput that we have? And then I'm able to then create the new hypothesis, be like, okay, that didn't work, that broke. Why did that break? You know, we can get client feedback, and then we have time during the slow season to actually build back up. And I feel like the first 2 years were kind of like a bear market. And so it was really difficult marketing and sales wise to get clients. You know, the growth rate was still good, but it wasn't amazing. Most people were in the industry were feeling kind of poor. They were feeling kind of over it. You know, we had a lot of people who thought like, oh, I just want to get my last crypto tax return in and then I'm never doing it again. Whereas like bull market in the last couple of years, people feel really rich. People, you know, don't want to look over their shoulder. They've cashed out a lot to fiat. They've bought a house, whatever. So, you know, now the demand is kind of more naturally there. And the amount of effort that I put into making tax interesting in marketing during the kind of bear market really has paid off. And I got to give a huge shout out to Liam Odo from Binance Australia, because I think it was it was a party in 2023, which was the first time we met in person. And my X account was at like probably 300 followers, and he was one of them. And he was like one of my biggest supporters. If I put a post out, I knew that I was going to have a like from Liam Odo at Binance. And when I met him at the party, he just said to me, he was like, hey man, really love the content you've been putting out. He was really encouraging, and he told me that at Binance, their best performing content is trading, but a very close second is tax. And I was like, man, that's so good to know, because for me, I was like, nobody wants to hear about tax. Like, it's such a boring topic. And to actually hear that such a big organization, they knew that tax was an important like content pillar for them, I was like, okay, I can crush this. And, you know, from meeting him at that party and, you know, really saying I can crush this, within a year, I was like 300 to over 10,000 followers on X. And
well, your tax content is also very good. Like, you put out tweets. Like, I will routinely read your threads on tax stuff, and I'm never going to, like, before you, I was never reading fucking threads on tax stuff, but it's always like, good hook. Oh, this is what you need to know about this thing. It's like, fuck, I am doing that. That's actually, this is like nice. Like every day, second day, there's like a little tidbit on some of the tax implications and what you should know. And you're like, cool. I'm actually going to write that down and note it. So you've done very well on that front. So, yeah.
Thanks, man.
Kudos.
Yeah, I've put a lot of effort in. You know, there was a lot of effort before the kind of like blow up. But yeah, I'd say, yeah, that was a big thing, was just finding my marketing channel that was the best marketing channel, finding my voice with content, and just hammering it and just completely not thinking about anything else, because the prior years I was doing everything that I could from like a traditional digital marketing perspective, you know, running pay-per-click ads, trying SEO, trying everything, and nothing was really sticking. And I was just burning through money with marketing agencies and ad spend and all this. And then it turned out that all I needed to do was, put a couple tweets out every day, and
just be a terminal poster. Yeah.
yeah. I just needed to be chronically online, and that's all it took.
Just live on Twitter, man. Simple. Yeah. Oh man, you're inspiring me to be less of a shit poster. I take my Twitter so not seriously, and like people tell me all the time, like, man, you should just like choose more of a lane. I'm like, okay, but got to move away from pure shit posting. It's awesome to see you guys grow, and you do good stuff. To kind of round out this little ep here, and bringing it back to the more tax side, I'm going to get your kind of vibe on this. You can answer this as broadly as you'd like, as to not land either of us in trouble with any, authorities. But how do you feel about tax as it applies? Well, tax regulations as it applies to crypto today. Do you feel like different jurisdictions are getting the hang of crypto tax, or do you think there's still a lot that needs to be worked on? And what are the main kind of things there, if there are any, that you'd be like, fuck, this makes so much more sense. Like, why aren't jurisdictions doing explicitly this with tax?
Yeah, man. I think I need to quote Hayden Davis on this one. It's like, yeah, man, I think the governments are kind of like, yeah, I don't know if they're good guys, so we're trying to max extract on this one. Like, I think that feels like where the rules come from and what the vibe of the rules are. It's like, I don't think they're very good. I don't think these are the type of people we like. So let's just, take more than our pound of flesh. Especially the guidance that the ATO released on like DeFi, for example. I love how Harry Dell just said, like, it's as good as toilet paper. Yeah, because it really showed that they didn't truly understand how things work. And I find that it was almost as if they were looking to create as many friggin' CGT events as they possibly could. And that might not on net lead to more tax being collected, but what it definitely does is makes documenting everything way more complex. It makes calculating everything way more complex. And it puts a little bit too much burden on the taxpayer when it comes to like record keeping and having to understand how things work. I'm a huge advocate of the tax rules should be fair. They should be simple. I completely understand that governments need to collect revenue, and that taxes is a part of that. So if we, throw out the taxation as theft idea for a second and think about, okay, if the government is going to collect tax from us, what is fair? What does that look like? I've got my thoughts on that. I feel like because crypto is such volatile assets that it shouldn't be considered income at the time received. It should, if you receive staking rewards, if you receive mining rewards, if you receive airdrops, that should just be a tax deferred thing. It's like, it's a $0 cost acquisition, and if and when you sell it, you pay tax on the full value at sale. Like, that's very fair. Because, if you just receive some ethereal token and it's, if you're taking token value times token price, well, like, you might go onto an exchange aggregator and go to sell all those tokens, and you're going to be seeing 1%, 2%, 3% or more price impact. Like, the liquidity isn't even there for you to get that value out. So I really feel like it's way more fair to just tax you on the actual proceeds that you get out of selling that token. I think that, overall, like, the simple, like, it's good for me if things are complex, because that means that I can charge more for my services. But for me as a taxpayer, I don't want things to be complex. I want it to be very simple. I actually kind of like how Portugal does it, where essentially if you hold any token for more than a year, no tax. So, of course that means that they collect less revenue, because most people will go, okay, I'm going to sell my SOL for USDC. I'm going to let it just sit in DeFi for the next 12 months, and then I'm gonna cash it out to euros. And the only kind of tax liability that you have then, well, you don't have any because you waited 12 months. There's no tax liability on it. So
I did not know that about Portugal. Like basically, you just wait to day 366 and be like, sweet, we're good.
Yep, damn. Take it out tax free. They still pay income tax on some of the income tax events, but like I think the simplicity is amazing. So I know that wouldn't be realistic for a government like Australia that wants to be collecting revenue on it, and it might open up a can of worms where people are like, well, why do those crypto degens get those really easy and fair rules, but us in the shares trading market don't? But yeah, I think simplicity would be very welcome in terms of like recording and reporting these things.
Yeah, it is a funny situation. Like I'm by no means like a destroy all banks libertarian. I'm happy paying tax. Australia's a good country to live in.
Tax. What is wrong with you, man?
Happy may be a fucking maybe overstating it a little bit, but I'm just assuming that someone from the ATO is going to watch this. So it's great. Keep it going, guys. No, but yeah, like I'm fine with paying tax. I think that tax bracket creep is something that needs to be addressed in this country, and there's lots of bullshit that goes on with it that I'm very unhappy with. But on the whole, as a general principle, fine with tax. But when it comes to, the complexity side of things, it is, particularly in crypto, just kind of insane that it's like, oh, by the way, there's all of these complicated things that are going to occur in the ecosystem. Not only that, but you technically have no help as a taxpayer in doing this from our end. Oh, and by the way, if you fuck it up, there's fines and potential jail time. So have fun with that. So it does feel like a bit of a ridiculous just setup from just a government perspective in general. Final question that I always like to ask people, because I know you're a degen at heart as well. I think you put out a tweet the other day saying that you're the most risk averse like investor in like a risk on like asset class. But what are you looking at the rest of this year, or just the rest of the bull market cycle that we're in right now, however long it goes? What are you most bullish on / most bearish on heading into the rest of the year? And that's broad. It could be an asset. It could be a just general kind of industry. It could be whatever you want.
Yeah, I'd say starting with bearish, I'd say that I am very bearish on even the macro outlook for the next like 1 to 2 years. Okay. I do think that there is most likely going to be like a large deleveraging of sorts in the kind of macro environment. Similar to GFC, maybe not the same level, maybe not the same way, but I think that we're probably due for something like that. And so for me personally, I'm like, I'd rather kind of, instead of playing musical chairs at the end of like a giant macro cycle, I think I'd rather be, cashed up. Because the way that I see it is most people made their fortune buying SOL at $8 or, buying Bitcoin down at like 20,000 or, in the teens of thousands. And trying to eke out that last 10, 20, 30% gain and trying to time the top perfectly, I think is a fool's errand for me, especially. So I'm not a buyer of anything right now except for essentially cash. Okay. So that's kind of the position that I'm coming from, because I see, maybe in the next 1-2 years that having that cash position means that when there's blood in the streets, that's that's when the real like best risk reward opportunities will present themselves. And I'm bullish in the very long run on crypto as an industry. I'm betting on that. That's why I have a business in the space. I will continue to bet that there is innovation that occurs. I really like how like Jeff Bezos talked about electricity and the internet and now AI as being these horizontal enabling layers, meaning not necessarily themselves like an industry per se, but they're these things that enabled all these industries to pop up and businesses to pop up and make a lot of money using them, using electricity, using the internet, using AI. I think that crypto could be, a horizontal enabling layer of sorts. I don't know what that looks like right now because, other than DeFi, perps trading, and speculation, we don't really see the use cases emerging. But, I think it's going to be a great horizontal enabling financial layer of things. And so I'm betting on it long term. Like, I'm really just bullish on crypto. I think that we're going to get absolutely hammered when there is an economic downturn because it's the easiest asset to sell the cash. It's going to be one of the ones that just gets destroyed first, especially being a high risk on speculative asset. When people are fearful, that's going straight to the market, going straight to CoinSpot, going straight to SwiftX, whatever.
I'm not holding my fart coin through the next GFC,
Exactly. But, so I think it's going to get absolutely destroyed in the next couple of years when we do hit a bear market. But then I think what emerges after that, especially with how legitimate things have become in a lot of ways, I think that we're going to see a lot of new use cases emerge. I think that the industry is going to mature. And I think a lot of the people who build through that bear market, who have the balls and the conviction to do that, are going to build some really incredible things. And I want to be there with some cash to support those builders, to invest in what they're doing, and to really continue supporting the industry long term. So that's my long-winded answer.
That's a fucking awesome take, man. Dude, fantastic. Man, thanks so much for coming on the show. Really appreciate it. Where can people find you on socials, and what would you like to point people towards? What's something that you've got coming up, or a service that you'd like to provide that you'd like people to go check out if they're listening in?
Yeah, man. The pretty much only place to find us is LinkedIn. Just kidding. We're on X, also known as Twitter, at CryptoTaxSucks. That's where you're going to find everything that I'm putting out content wise. And yeah, if you're looking for someone to actually go into your crypto tax software, review your transactions, categorize them appropriately, make sure that your balance is reconciled and that those crypto tax reports are tax office ready, that's what we do. Our website's cryptotaxmadeeasy.com. If you go to our /contact, you can actually request a quote to work with us. Right now, as I think we mentioned, we are capping our client load this year. I'm actually capping it at least 20% below our team's capacity, because Murphy's Law is real around tax deadlines. Anything that can go wrong does go wrong, and it tends to mean that tax deadlines become stressful. And I kind of want to reduce the stress on our clients and our team, which is why I'm doing that. So that means that any existing clients that we have, they're going to get first dibs on the spots we have available this year. Once we assess what's our capacity after we've given our returning clients their spot, then we're going to kind of open it up to our waiting list and to the public. So if you request a quote from us now and you're a new client, if you get us to do a historical look back, you want us to go do previous years, years that have already closed, we can do that. We're still enrolling for that. But if you need us to do this tax year, if you're in Australia, obviously tax year just started. If you're I only want you for 25, 26 tax year, okay, we'll get on our waiting list. We'll talk in a couple months. If you're in the US and you want to jump on the list for 25, we'll again open enrollment in a few months, but you can get a quote, see how much it might cost to work with us. And then, if you want to be on that waiting list, you can. So that's the shill.
Man, thanks for your time today, dude. It's been awesome. Thanks for, peeling me on everything that I need to know about tax. Because the good thing about this podcast is I get to ask questions that I have as well. So it's nice to know. Appreciate you, man.
Yeah, likewise, brother. Thanks again for having me on.